What's going on, everyone? Today we are going to be breaking down the early AM session trading for Friday, June 28th, looking at specifically NQ, while also taking a quick glance into ES. So, without further ado, let's go ahead and jump right into the charts. At the risk of sounding like a broken record, we're going to refer to the daily chart to start our analysis, and I'll just go through these levels with you right now. So, if you can remember from recent videos, we have been talking about this level right here. There was these equal lows on the daily. We stabbed into that Monday. Tuesday, we dipped below that as well. From there, the draw was higher prices. That's what I was interested in. So we had a little fair value gap up here on the daily, as well as we have these daily highs. Now, I'm not too interested in these being met this week because on ES, this high is actually a lot closer. We're only 5 points off of it. So I believe we will hit that by the end of the session. So let's go ahead and look a little closer, start digging through the time frames. You'll see a lot of the same PD arrays that we've been looking at all week. We start to see some of them maybe be inverted, right? We see right here, this holds. And what is this doing right here? Why do these things matter? Aren't these levels old, you might be asking? Well, actually, these are just going to help us frame the bias. So you see, in ES, I referred to that old daily high, whereas in NQ, we actually had this SIBI up here, this 4-hour SIBI that we can refer to. So this is a reasonable ceiling. This counts as much as an old high does. Now, when we start to dig in deeper, look at the lower time frames, what do we see? Not too much on the hourly per se. I mean, we start to see some nested fair value gaps that we talked about recently. But as we get closer to our execution time frame, all of this will start to make sense. So let's go ahead and drop to the 30, see if we see anything else. Nothing too much right here. But when we get to the 15, that's when I want to clarify some stuff. So what did we have here on the 15 that really got my attention? One, we had this fair value gap. This fair value gap was really important to my analysis for this opening drive, if you will. If we go ahead and take off these levels real quick, we can look at the power of 3 formation. We see that midnight open, we had mostly accumulated below midnight open with a little swing above it on the data, but ultimately we drove lower, taking out Asia low, these London lows, and digging into this fair value gap. So let's go ahead and draw these out so we can see that Asia low right here was taken. We'll mark this as our sell side liquidity. So we see that we had a swing higher, but what did this accomplish? Did this take out any old highs? Not really. Not really. We had these, but these were all relatively equal. This is accumulation. This isn't anything interesting yet. This didn't take out any significant high. So I wasn't interested in the short per se. As you can see, following the data, we drifted lower into the New York Open. And we had some early initial reactions here with this hammer candle. But as you can see, that was not very fruitful if you were to buy this, or it didn't even trigger, if you will. You know, if you're trading above the top of it, it didn't trigger. So where was my focus? I'm going to go ahead and drop down to the lower time frames, and we'll start to break this down. You see, we have this data high right here. This was a draw on liquidity that I was interested in. This was the ultimate target, if you will. Knowing that the daily candle is likely to expand higher, this is a very reasonable draw on liquidity. From there, we can drop to the lower time frames where I actually executed the trade. So if we want to go ahead and look at the real time and see what I was seeing in the moment, this is what I was looking at, and just drawing out a few levels. Right here, this is the low-hanging fruit objective. This is your easy money target. Any day of the week, this is your easy money target. But you can see right here, we just have a drift lower. Nothing here is really enthusiastic. There's no excitement. We didn't tap into this fair value gap. As you can see right here, the data was mixed. It didn't give you a clear directional manipulation. So my assumption was that this was all the manipulation lower. I wasn't thinking short because we shot higher first. That's the wrong way to look at it. We want to see what price is actually accomplishing with its actions. Now right here you can see maybe there was a fair value gap that was formed. I was watching this in real time. I didn't enter here. I just decided not to. I wanted to wait for a more significant change in the state of delivery, if you will. I wanted to see something with some conviction. This didn't really convince me much. This was a minor market structure shift, kinda. That's not really what I was looking for this kind of trade. I wanted to see something a little more convincing. So you can see right here we had this fair value gap that failed. We can also overlap that with this fair value gap. Just go ahead and shade this gray. And these levels are going to get a little messy, but this is just to show you what we were actually dealing with. And you can see here, this is the 930 open. We had these relative equal lows right here. Let's go ahead and mark these out. These were taken out by a down close candle. And that down close candle, boom. This right here, you can consider this an order block or a change in state of delivery, because what it is a down close candle where we broke the high, but this down close candle manipulated these lows. So right here, we had the inversion as well. When I see these multiple layers of confluence align, I'm interested in getting long. I'm going to just buy right here. And that's ultimately what I did for the trade. I bought right there, and let's see. I sold into what I said, this target up here. So as you can see, we end up running that wick, but let's go back and go through this bar by bar before I show my executions. As you can see right here, we had a move higher. My entry was 73. The easier money trade is going to be just this. You can get it's the order block with fair value gap overlap. That's probably the best you can get right here. This is the best entry you could get. Just teleports to your target from here. Boom. And then this was my exit candle. I exited right here. Why did I exit there? Well, because I don't really need more than 50 points, if I'm being honest with you. We can hold. And if you had multiple contracts, go ahead and hold. But there was a likelihood that this failed right here. But above here, we have midnight open. That would be our secondary draw on liquidity. Not necessarily a draw on liquidity, but it is a magnet for price. And if that's something you start to look at, you'll see it happen over and over and over. And then there's ultimately your target. Boom. Now, we continue much higher than this because of what I was saying with the daily expansion. We were likely to go higher. So if we want to take a second to take a look at my executions, here we are right here. Let's see. So let's see if I get a little marker. Nope. I bought right here when we broke through that fair value gap and also the change of state of delivery, where I'd argue this is the better entry. This is the higher conviction entry, and this is obviously your easy money target. So I initially wanted to sell right here, but seeing that we just barely tapped this right here, I put my exit above that candle. So that's why my exit's 117. I could have, maybe weathered this. I just didn't want to risk this going to this. If this were to just continue lower, that would be a waste of a trade. So what I was trying to do was just hit something really easy, really clean, and then go from there and enjoy my day. So taking a look back at this, what did we have that worked in our favor? We can go ahead and get rid of these higher time frame levels. We saw that they mostly acted as an inversion, but to clean up the charts, let's go ahead and just look at the raw price action. You had multiple entries here. You had multiple entries you could have taken. You could have bought down here, honestly, because you're hugging the lower end of this fair value gap. I didn't. I liked this right here when we broke above this down close candle. Remember this down close candle that manipulated these lows. When we broke above that, that's what I considered an order block or a change in state of delivery. So I was ready to get long right there. Now we saw this failed. We don't even necessarily need this. We can just look at this right here. And here's your easy money target 1. And that's your easy money target 2, or your ultimate target really. Yeah, you could have maybe held for 200 or whatever. That's up to you. And then up here, I guess this is an ultimate ceiling. This is our 4-hour. Just referring back to the chart and the levels that we marked out earlier. That's your 4-hour SIBI. So you had 3 potential targets using just a simple logic. Nothing complex here, no indicators, no nothing. Just looking at raw price action. And I hope you enjoyed this example. I hope you learned something. I know a lot of you guys profited from this move, and if you didn't, I hope you learned something. So for the next time, you can utilize these concepts to help identify large range days before they happen. There's no need for hindsight with these tools. You will, in time, be able to identify moves like this and ultimately, eventually be able to capitalize on the majority of it. So, thanks for your time. Hope you enjoyed. If you got something out of this video, if you enjoyed it, please remember to like, share, comment, subscribe, do your thing. And until next time, later.